Taresh, tell me what happened this past week.
So, after much anticipation, President elect Trump chose Scott Bessent as his Treasury Secretary.
And what did you think about that pick? What was your initial reaction?
I thought it was a pretty controversial pick in some ways. So, not everyone was pleased, right? You heard people like Elon Musk calling it a business as usual choice. There were people on the far right and the far left that came out and criticized the fact that a Wall Street billionaire is being appointed Treasury Secretary.
But the market reacted in a different way. If you're telling me not everyone was happy, it seemed like the market was pretty happy. Tell me more about that.
The market was happy about Scott Bessent. And it goes back to our conversation from last week. I think part of the reason why Trump chose Scott Bessent is because he cares about the markets. And this was viewed as a good, somewhat safe pick for investors, someone that can move Trump's policies forward in a way that markets are comfortable with. And so market reaction was very positive. We saw generally stocks move higher. We saw yields fall in terms of 10-year yields and longer term rates. So I think markets were generally affirming that this was a pick that they felt comfortable with.
It's interesting that he chose someone that spent the majority of his career in the hedge fund world, similar to your career. What did you think about that appointment when it comes to Treasury Secretary?
So this is a name that maybe is not as familiar to Main Street, but his background and what he's done over his career is very familiar to market participants. So he's worked with heavyweights in the investment world like George Soros, Jim Rogers, Stanley Druckenmiller, Jim Chanos. So this appointment, I think from an investor perspective, is viewed as de-risking many of the concerns around Trump's presidency. Bessent is viewed as measured, he's viewed as consistent, predictable. Probably not the first words that you'd use to describe President Trump, but it serves as a balance. And that should help practically bring a lot of Trump's policy into fruition while making sure that we can avoid a lot of the potential collateral damage that could be caused along the way.
So I find that interesting. I don't think a lot of people outside of the hedge fund world see hedge fund managers as a de-risking world, as measured, consistent, predictable. But what does Scott's background as a hedge fund manager tell you about what the next 4 years might be like?
Yeah, that's a really good point because I think a lot of people think about hedge fund managers as these aggressive, wild traders that are recklessly maybe even making massive trades. And the reality is they're often much more deliberate. They're often cautious than I think what people would expect, right? Their goal is to isolate very specific bets that they want to make and de-risk or hedge everywhere else. So the DNA is much more along the lines of being an objective truth seeker and caring about making money more than sticking to any dogma or sticking to any preconceived belief. And my first hedge fund job was under a famous activist investor named Nelson Peltz. And one of the things that he had said always stuck with me. It's one of my favorite things where he used to like to say, I'd rather be rich than right. And that was his way of saying, I'll change my mind. If the facts change, if the circumstances change, I'm just trying to make sure that I get the trade. And if that means that I was initially wrong, then we'll take that. So I think investors appreciate that about Scott Bessent's background, right? If you're a market participant that's a fan of the economic growth potential of Trump's policies, but you're maybe nervous about the impact of things like tariffs, of inflation, of the deficit, this helps you feel more at ease that we'll be more strategic in any policy moves and we'll have an eye out for any collateral damage that may come with it.
So you mentioned tariffs. That's been all over the news the past week. What do we know about Scott Bessent's views on tariffs?
So Bessent has been a proponent of tariffs and giving us a better position in international trade, right? And so we should expect him to back Trump up in taking very aggressive stances in tariff negotiations. I also think that this appointment gives us more comfort that any tariffs that are put in place are deliberate and they're done so in a more structured way, right? So Bessent has made comments around using big numbers when you start off a trade negotiation as a negotiating tool, and then being more gradual potentially than implementation of any actual tariffs, right? He has also said that he views tariffs more like sanctions. So they don't necessarily have to be permanent. They are levers to get other countries to behave in the way that we want them to behave, and that's more favorable to us. He has not made comments that, we are isolationists at any cost. His comments around tariffs are they're a means to an end and they're a tool that we can use to even the playing field, or as a power in the world that obviously has a lot of influence, to tilt the playing field more in favor of the United States and our economy.
Many people also think that they see tariffs and they just assume that means me, the consumer, I'm going to pay higher prices, right? They just assume there's a direct correlation. How do tariffs relate to the actual bottom line price that we as the consumer pay?
Yeah, so in a vacuum, that could be true. I don't think it's as straightforward as that. And so I think if tariffs are put in place, there's a possibility that the exporting country takes the brunt of some of that pricing pressure, where they're just going to charge less, take less profit, and so have a lower price to start with. And then there's also an element of there's a lot of supply that's been put in place in the US. And especially over the last few years after COVID, a lot of what actually Bessent would call duplicative manufacturing that's been put in place in the US. And so because there's more supply of a lot of the goods that we otherwise would be importing, as we start to see that continue to ripple through the marketplace, we already have natural downward pricing pressure from that.
We also saw something, this 333 plan that Bessent has talked about. Give us kind of a breakdown of what that is.
So Bessent pitched to Trump, it's been reported, this 333 plan, which is GDP growth of 3%, 3 million more barrels of oil produced a day domestically, and getting the deficit to 3% of GDP, which is actually about cut in half from today's levels of around 6% of GDP. So that's the plan. And I think he has been a proponent of a lot of Trump's agenda to get there. So I think the key component of this plan is just higher economic growth. Even in terms of the deficit reduction, he talks about government spending cuts, but a bigger piece of what he's wanting to do is just stimulate economic growth and make the deficit less of a problem, as long as the GDP growth is there to support that level of deficit.
Sounds to me a little bit like the Trump presidency wants to be similar to the Roaring '20s with Calvin Coolidge days, huh?
He's talked about that. Yeah, that's what Scott Bessent has compared what a second Trump presidency could be akin to.
Okay. So we walked through like Bessent's past, what he has proposed to Trump, and obviously who knows what will actually happen come late January of 2025. But what are the overall thoughts and plans about how he might try to stimulate the economy?
So his agenda, I think, is very similar to President Trump's. He wants to stimulate the economy through deregulation, increased domestic manufacturing, increased energy production, lower taxes. And he feels if those things are put in place, we're in for a very good economic period. And all the positives that investors were looking forward to in terms of economic growth potential under Trump's policies are in play. But now there's someone at the helm that's pragmatic and can shepherd some of these policies through Congress, which kind of gives investors the best of both worlds.
Taresh, thanks so much for your time. I'll see you here same time next week.
Absolutely.